Karimaka, everyone joining the webinar. Thank you so much for joining in. This is it's 4:53 p.m. India time, Sunday, 12th April 2026. And we are going to do the global market review, looking at all the major global equity indices. Quite a few lessons today, and hopefully that's going to be a very instructive webinar. So do stay tuned in till the rest of the entire session. And as I speak, you probably already know that the Iran US talks have failed. There's been no uh, agreement reached about what is going to happen and how things will move forward. So let's see. And whether the hostilities resume or are there going to be some other developments that will happen. A lot of news about US. Of course, each side is blaming each other. And the US says that they're clearing the mines in the Strait of Hormuz. But on the other hand, a very simple headline in The Guardian, which is like the talks have basically not worked. So let's see what is in store. Do the markets open up or down tomorrow, or this becomes a non-event and it's like, okay, just one more thing that is taken in our stride. So before going ahead, just to reiterate that this is not investment advice. It is for information and education purposes only. Please do your due diligence before making any investment decisions. This webinar is especially useful for people who have a global investing worldview, looking at opportunities across the globe and seeing how one markets are positioned versus each other, and then finding out what would work best for your situation, requirements, circumstances, etc. So having said that, let's jump into the markets. And right now, if we go to the Dow Jones and start with the US as well, not always the leader in setting the tone for the rest of the world, but definitely a major indicator of how things could pan out. So remember, it's Sunday, markets are closed, and actually, we should look at one place and let's see if there's any indication of anything happening. Just hold on. Right. So I was just looking to see if there was any market reaction I could find anywhere uh, after the news that the talks have failed between Iran and US. Well, couldn't find anything. So let's move on. All right. So this is what you're seeing as on Friday, uh, 10th April close. This is the Dow Jones that you're seeing. And as we said in the India market review that was posted yesterday, the entire world has, definitely recovered well. And we're just going to now look at how things are across various parts of the world. So after a 10% correction of the Dow Jones, nice recovery. And as we had mentioned in the previous webinar, you had this bullish divergence, which was there. And that continues to pan out. Still about 3,000 points, about 7-8% from its life high. And if technically, purely, if we were to look at it, there's probably a higher probability that the market is likely to go up rather than go down. If you look at the broad market, the SPX 500, that's also very much looking, I would say, bullish. It has also broken this resistance or support line, depending on how you want to look at it, and gone through it and gapped up through it, actually. So earlier, that was the rounding top that it broke down off and came down about 10% before doing a really nice recovery there. So whether it is just the Dow Jones narrow market or the S&P 500 broad market, or you're looking at the tech-heavy Nasdaq 100, we are all basically looking at a similar uh, move that has happened. Uh, Another few hours, we'll know whether how the markets react to the failed talks. But purely technically, saying the probability, the setup is more likely bullish than bearish. And in the US, finally looking at the very broad market, Russell 2000, which is 2000 stocks almost, the broad market, that's also looking quite well. And all of them fairly about 5 to 7% away from their life highs of February 2026. Right. So that's basically the US. Moving on to the rest of the world, you're looking at the Toronto Stock Exchange, which has done exceptionally well, something that we have spoken about in the previous webinar, and definitely a much better recovery and pullback in the Toronto market rather than in the US market. But remember one thing, and this is a good lesson to for us to all to keep in mind, that all these equity indices are marked in the currency of their country. And when you convert the equity index into, say, a constant currency, the US dollar, usually, then you can get a very different chart, as we will demonstrate in a little while. Right? But TSX, the Canadian exchange, Canadian dollar, more or less being quite steady against the US dollar, this is not really an issue. Looking at the German exchange, right, the DAX, again, good recovery, but not as strong as what has happened in the American markets, right? CAC France, also a good recovery, better than the German markets recovery. And if things go well, then this should perhaps continue the outperformance in Europe, right? Looking at UK now, the FTSE 100 index, fantastic recovery, I would say. Very sharp fall after the fall, but also a very, very, very smart recovery. And this is actually, you know, quite interesting that Europe, despite being hit by the high oil prices and the general uncertainty of the future, especially for Europe and the Middle East, that the European markets have been quite resilient and have gone up. Says more about the financialization of the markets rather than the underlying economy itself, but this is a good point to keep note of. Going to the east of the world or the planet, depending on how you want to look at it, you have the Nikkei, the Japanese Nikkei 225 index, a broad market index. And this again, a much bigger fall, almost 1.5 times more, about 15% in the Nikkei. But compared to the US, a much stronger recovery, and looks like it could go to a higher level. Now, if I were to change this to the USD, let's see if there's a difference, right? So slight difference in not very much. The Nikkei, the Japanese yen and the JPY have more or less been similar. But actually, if you noticed, in this area, there was definitely a difference, and that's attributed to the foreign exchange differentials which are there, which can give you a challenge in interpreting the technical analysis. So really depends on which currency you want to invest in and which currency you want to take your returns back out of. That's something to be discussed more in detail later. The Australian Exchange 200, ASX 200 really doing well, almost, close to a new life high. Surprise, surprise. And uh, this is like excellent pullbacks that we have seen, right? Looking at the Shenzhen Composite Index, Shenzhen Stock Exchange, this is something which is, we've mentioned before, a pretty interesting setup. This is the 2008 peak, is one of the rare indices in the world where the 2008 peak has still not been recaptured and exceeded. And we have almost a 16-year, almost, yeah, no, sorry, almost, yeah, 20 years of consolidation pattern, reflective perhaps of the struggles of the giant Chinese economy, real estate bubble, slowing down of the economy, etc., etc. Right? And After almost 20 years, we are still a good, let's see, let's just put a mark on that. From its highs of approximately there, it's still about 31% down, right? That's not small. That is a huge thing. Now, if for whatever reason this technical trend were to break out of this downtrend line, then we could easily see a 30-40% rally in the Shenzhen index, right? And remember, the CNY, the Chinese renminbi, is a currency which is held very strongly, managed by the Central Bank of China, and it is, if anything, an appreciating currency. So the Chinese story is perhaps something going to the Chinese equity story, let's put it that way. Equity market story is perhaps set for something quite interesting and extremely perhaps profitable in the 6 months to 2 years from now, given also that the US dollar and the US economy is, or Europe also, is facing challenges, and China is the one with the surpluses, right? So this is something to be reiterated over and over again. And like I said, something that we all need to get deeper, especially for global investors, and explore the Chinese investment opportunity directly or indirectly. The Hang Seng Index from Hong Kong, well, really nothing much to write about. Again, almost a 20-year sideways contraction, sorry, sideways movement. Lots of geopolitical events have happened, the Chinese takeover of Hong Kong, etc. Really nothing much to speak about till some decisive move happens one way or the other. Quite likely, if the Chinese equity markets do well, Hong Kong is likely to follow. Coming to some other parts of Asia, we're looking at Singapore right now. One thing that's immediately noticeable is that the recovery is not as strong as the American equity markets or the European equity markets, and Singapore, little bit of a laggard, right? Then looking at South Korea, this one fell dramatically with concerns on many fronts, the semiconductor chips, the fuel, energy costs, etc., and how demand may or may not recover. Uh, Gone sideways for about a month and a half, right? And looking to go up, perhaps, but this rise which has happened in the Kospi over since March 25, right? It's about 1 year, 1 month, from almost 2,600 to 6,000. That's like a 2.5%, sorry, 2.5 times rise in the overall equity market. That's spectacular by any standard, right? And that's something to be kept in mind, whether this sort of move is sustainable and whether Kospi can continue to have this marvelous performance, or it's going to go into some sort of a time-based correction, if not a price correction, right? Looking at the Taiwan Stock Exchange, this is definitely also, really done well. If you look at it from August 25, almost a 50% rise is what you can see. Kospi is like head and shoulders way above anything else. But Taiwan there, and despite all the challenges with China, Taiwan, and all, things are looking good. The Taiwanese opposition leader visited China and met with Xi Jinping also. That was big news in Taiwan. And she made the statement that, Taiwanese are basically Chinese and belong to the same ethnicity. A lot of controversy around that statement. We'll have to see how that pans out. But the Taiwanese market is definitely looking good. Looking at Indonesia, well, big correction since the fall since the fall started because of the war, and really you can see here a good example of a very poor recovery that has happened, and Indonesia is definitely struggling to recover. As you saw, the many other uh, equity markets across the world have done really well, but Indonesia is definitely a laggard. Whether it's because of high oil prices and energy imports and other things, I'm not sure. But yeah, this is something that we need to keep in mind. Remember, the markets, it's a Friday, so all markets are closed, right? Except you'll see one or two which are flashing on your screen. We'll come to that in a little while. This is Vietnam, right? Started adding some more indices for our study. And what is interesting about Vietnam, and reason I added it, is that only recently has it basically, broken its previous life high, right? And that's something which is always very significant and something to be looked at and see, what does this mean in terms of the future. So you had a really excellent recovery, or run up rather, in 25, with it starting at around 350 and ending at 650, almost a doubling. I'm suspecting this was after the agreement that Vietnam pulled off with US about tariffs, which was the previous issue with Trump, and that was a relief rally and all. Now, this seems to be forming a sort of flag on the monthly charts, right? That's a big move, and a flag for 1, 2, 3 for about 6 months, digesting the gains, doing a time-based correction. And if this does pan out in the way technicals suggest, then are we going to have another, say, 50% up move in the Vietnamese index, say, in the next 6 months to 1 year? Again, if that happens, for an index, overall index to move like that is definitely a spectacular movement. So many markets suggesting that there is some uh, strength that is building up underneath. Let's see. This is the Nasdaq Philippines index, and this is in the US dollar. If I make it the Philippines peso, really not much of a difference, as you will see here. So this is something I wanted to uh, basically highlight. You can see that the chart shifts a bit, but not by much. So this is really interesting that the Philippines market, for the data that is available from 2013, has basically been, flat around 50,000 this way, that way. I mean, I'm like actually seeing this. In a sense, I prepared for this webinar adding some equity indices, and I was really surprised to see I had not seen the Philippines index for a very, very, very long time. But this is remarkable that the peak was in 2018. We don't have data before 2013. And even after that, almost for 9 years now, 7 years now, we are just seeing a very, very flat market. So wouldn't want to look at it from an investing perspective, but good to academically to know what might be happening. Coming to Malaysia, this is interesting. Malaysia had a double top in 2014, and then in 2018, there were a lot of political ups and downs in Malaysia, as we all know, scams and prime ministers being changed and all. But look at this. If you look at the more recent part of Malaysia, you're seeing this uptrending channel, which started in May 23. It's very much inside that channel. And if it does that in 26 or 27, then we're looking at this going back to its life high. And if that happens, and then that becomes a sort of maybe a tentative triple top, and then a breakout of that, we could see a very significant move of 50, 100% in, say, 6 months to 2 years after the breakout happens. I'm speaking very early here, and sticking my neck out. Not sure. Of course, nobody knows for sure how things will pan out, but at if we really want to extend this, then could this happen sometime, say, in 27, right? Well, you never know. So sometime in April 27 at the earliest, or the second half of April 27 is something that you could look at, of course, assuming that a lot of things pan out. So Malaysia looking interesting, and time will tell what will happen. Looking at the Nifty here, and this is something that I'd mentioned in yesterday's India market review, that the rest of the world seems to have definitely done better. So now I hope that makes sense for those of you who watched the India market review. So you saw US and Europe really break out much better and cross all the long-term moving averages, while India is still well below the long-term moving average. And this is why I said that the global markets are seeming to be far more resilient than the Indian equity markets. There are a lot of pressures on the Indian side in terms of the rupee depreciation, appreciated a bit, but still overall depreciating. FII is pulling out money, FPI is pulling out money, and if not a overall, definitely challenges on the IT side, real estate side. Um, so economic growth starting to definitely drag. So maybe that's something to keep in mind. If, like I said, if you're a global investor, then you're looking at opportunities which are much better elsewhere, definitely. This is the TASI, and that's the Tadawul Exchange, Tadawul Index in the Saudi stock market, right? And this is open on Sundays. That's why you're seeing this flash on your screen on the right side. Friday, Saturday is a holiday. Monday, Sunday is a working day. And again, to reiterate how Saudi has really been resilient all through the war, right? You saw this one, two, three sort of quadruple bottom on the Saudi Tadawul main exchange, and it really didn't break down at all, despite the war. And to get the point across, let me just put, let's say, here the Dubai Stock Exchange, and see the the fall that this is the daily chart. The Dubai market down 21%. This is like from, say, early Feb. And if you go back to, and just to go to Abu Dhabi, look at Abu Dhabi down 12.5%, 13%. So big falls in the Emirati markets. If you look further east, you're looking at the Qatari market down 12%. So Dubai took the big hit. All the other markets also did take a big hit. But if you look at uh, Saudi, 9% down, and this was around the same time, but really it did not create fresh lows like the other Middle East markets have done. And I think that really speaks to the resilience of potential resilience, let's say, of the Saudi equity markets and what they might entail going forward. So if you are in the Middle East markets, see if you can, let me clear this up. Can I? Yes, right. So Saudi market still not back to the 2006 peaks, right? Of all things, still a good almost 90% up move required. But the resilience that they're showing right now is something that speaks volumes and should be kept in mind if you are looking to invest in the Middle East. Again, remember that almost all the currencies in the Middle East are pegged very strongly to the dollar, 1:1 sort of correlation, almost. So you're not going to really lose anything on the Forex thing. And if there is one market that you want to be looking at from a longer term, lower risk perspective, then it is the Saudi market. Right. Now, for the first time, perhaps I have looked beyond this basket and let's look at South America now, right? Just moving completely into a different direction. And this is the Brazilian index, Bovespa, and this has been like, look at like literally going up and up and up. Uh, Seems like without any pause, and a lot of what would you say? Conviction is what one might be very tempted to uh, say is happening. But now let's look at this. Let me just finish marking this. So this is the life high of the Brazilian market. And look at this fall. I mean, hardly anything from 31, 32,000, let us say, to 30,000 and making a new life high at 33,000. How many equity markets do you know that have made a new life high? Now, however said, this is done in the Brazilian real. But if you change this to the US dollar, then you also get a nice strong move at 6,560. Now let me do that same thing here on the why I'm doing this will become evident. Look at it, right? So you can see that as far as the US dollar returns are concerned, right, I'm going to change this US dollar to Brazilian real, you see a very, very different situation. This top, which in the Brazilian real times was, far off at 11,000, this top, when you change it to the US dollar, right, is now not yet crossed, right? And this is because the Brazilian real has been depreciating so strongly against the US dollar. So if you are an international investor, these are very, very critical points that you want to keep in mind as to how the currency that you are, the foreign exchange rates could dramatically affect what the returns that you would achieve or not achieve. So if you are looking at the Brazilian market in terms of US dollars, you're saying that basically for almost 20 years, it's done nothing. But if you're looking at the Brazilian market in terms of the Brazilian real, you would be like, wow, what an impressive move that has happened, right? So I hope this is a lesson that is going to be taken home very seriously for those of us who are looking at global investing, and something to be uh, thought about deeper along with the foreign exchange rate. Maybe we'll do a separate webinar on that and understand how this is a very important factor in you either getting returns or not getting returns, depending on the currency that you measure the returns in. So this, remember, is the monthly chart of the Brazilian Bovespa index. Similarly, if we go to Argentina, this is again the monthly chart. You'll say Argentina, look at this number. I mean, like, have you seen a crazier number than this? You're talking about the Argentinian index, S&P BIMA, which is at 122, 123 million. Uh, uh, what is this even? Uh, Argentine pesos, right? So this has, and look at this move, right? Let me see if I can. Yeah, okay, why not? Just use this. Look at this move from here to there. You're talking about a 3,000% up move in peso terms, right? That's 31x, 32x. Okay. But if you change this to the US dollar, then this up move has basically, vanished, and there's really nothing that this market has done. Uh, and you would be very hard pressed to actually have said that you made money in this. But also very interesting. Look at this in 2020, in dollar terms, the BIMA index, okay, was at about 16,000, and then it has gone to 85,000. Like, I mean, these are like crazy moves. You're talking about 5x moves, 7x moves that happened in dollar terms, right? In dollar terms, on an equity market over a 6 year period. Um, uh, I think if you go back and look at economic history, not only did the COVID crash, but there was also some very real financial crises between 2018, 2019, before COVID hit Argentina. And this brings us to another point that if you find, you know, major crises that are affecting a country and one has the courage to, obviously you're not going to know the bottom, but you have the courage to invest and find out, when you have a panic situation, usually not always, but sometimes panics are the end of a really bad fall in the markets. And if you can tap into that or invest into that, these are the sort of returns that can happen. And when you're talking about an index doing this, can you imagine what individual stocks might be, what individual stocks might have returned, right? So just to make the point again, going back to the currency, right? Very different situation. Again, a very, very sharply depreciating currency, the Argentine peso. It's not a currency you want to be invested in, going to be hit really, really hard. right? So this looks like a great move, 72 million to 128 million in Argentinian pesos. If I do the same thing in the US dollar, it's looking like a pretty different situation, right? So 75,000 to 89,000 here. And if I go back to this, and this fall looks huge in dollars, right? And sorry, yeah. And if you do this in the Argentinian peso, it's a very different situation, right? So be careful about how you want to measure things, right? Dramatically different outcomes, right? These are lessons that need to be taken to heart. Here we are looking at in QMX Mexico, right? Right. So this is the Mexico index. And in the Mexico index, when you look at it in US dollars, this is what you're seeing. And actually, interesting. So you're seeing a new life high that has happened in US dollars as far as the Mexican equity markets are concerned. And this life high has happened very recently after a very significant double top between 2013 and 2024, almost 11 years apart. After having a nice base that was formed here, again, you can see the uh, technical levels that coincide a lot, right? From 2015 onwards. And this could be set up for something much, much, much bigger on the Mexican equity markets. Now, if I just instead do Mexican pesos, right, you're seeing a very different situation, right? Again, this is because the uh, Mexican peso has depreciated against the US dollar, right? And you're seeing uh, extreme rise, which seems to suggest something that of an excellent move that has happened in the equity markets. But then no, this extreme moves, and you saw this in the last 3, 4 years in Turkey also, that all these things are actually because of currency depreciation. So when the currency becomes weaker and weaker and weaker and values are lost, then hard assets, investable assets, productive assets are what go up in price, right? Those are the ones that retain purchasing power, right? So that is something to keep in mind. So just to hit home, you're seeing that the Mexican index went from about 15,700 Mexican, what's the currency? Mexican pesos, right, to 22,000. So that's about a 50% rise. But when I do the same thing in terms of USD, you will see a different chart altogether, right? You will see that it's gone from, let's say, uh, 1,130 to 1,300. That's about a 15% rise. That's dramatically different. And this double top, which is there. So Mexico definitely looking like after just having broken out, tested this levels also, maybe something that we need to really look at if we are global investors, right? Could 50, 40, 50% rise happen in the Mexican equity markets in dollar terms? Well, can cannot be ruled out. So let me just set this all back to USD so that we have a comparison which is apples for apples. Now, again, Brazil, if it breaks this, 19-year high in terms of US dollars, and phew, this could be a rocket ship that is there. So Mexico looking great, Brazil looking great, and then Argentina. Let's see. Okay, Argentina. I would say you can probably leave it because you already have found some great technical charts setups for Mexico and Brazil, right? So Argentina is probably the laggard for sure, right? Not saying that it can't go up, but yes, why look at something when you have something already found? So Mexico, Brazil, and let's look at Chile. Chile, wow, this is Chile in US dollars. So far below what it had ever been in from its lifetime perspective, not going there in a hurry for sure, right? And quite distance away. Struggling with this double top made between 2018 and now, very recently, could go up. Uh, and if it does, then definitely gunning for a 15-20% upside on to reclaim its old life high of 1,134 in US dollar terms. If you do the same thing in the local currency, which would be the Chilean unit of account, or it's Chilean. Oh, this is right. Interesting. You have Chilean unit account, Chilean peso, same flag, right? So this is the Chilean peso, looking again very, very sharp rise, but this is, like I said, yeah, on account of the currency's depreciation. And if you look at Chilean unit of account, this looks like a very different chart. I'm quite surprised. I'm seeing this for the first time, and I'm definitely going to be looking at what is the difference between the Chilean peso and the Chilean unit of account. Some interesting economic stuff happening there. But to wrap up on the global market review, Europe, US doing very well, right? And surprisingly, and China, remember that. And like I said, Mexico and Brazil are probably two markets that you need to really strongly keep watch on. If you're a global multi-country investor, right? So yeah, so that's it for today's global market review. I hope it was insightful and instructive, educational. I'm sure if some of you have any questions, feel free to reach out. You have the contact information on the screen. So not only have we learned a lot, I think today, we've also found some really interesting, perhaps very multi-percent opportunities over 6 months to 1 year, multi tens of percent. That too on the overall equity markets. If you were to dig deeper into individual stocks in those countries, I'm sure we're going to find much, much, much better opportunities. However, as global investors, can you invest, say, from an account in Europe or US or Japan or Singapore into, say, individual stocks of these countries? That's something to be studied. But usually you'll have exchange traded funds, which are usually traded in US dollars in the US markets, that direct money into the global markets that we have discussed. And we can look at those exchange traded funds for vehicles through which you could enter these markets, right? All right. So thank you very much. Looking forward to your feedback and your inputs. And till the next time, Mokari Maka.